following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Kevin in Orlando. Hey, Kevin, what's going on?
Hey, I'm doing great. You know, I am addicted to TFNN.
We appreciate you growling and prowling with us out here. It's a great network, man. And I want to thank everyone out there, for making it a great network.
Well, it's great because I do outside sales, so I get to have the station on my phone the whole day. And when I go pick up the kids from school at 3 o'clock, they all love it and giving the old wow. Educating the kids at a young age is a good thing.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 3 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Become a white magician. Be impeccable with your word. All the magic you possess is based on your word. And you cast spells all the time with your opinions. You can either put a spell on someone with your word, or you can release someone from that spell. Pretty wild one. Market-wise, let's take a look at it out here. We have the Dow Industrials down 17, NASDAQ up 2, S&P's flat. Actually, NASDAQ up 2, S&P's down 2. Gold contract down $3.90, trading at $1,342 an ounce. Silver down 43 cents at $18.88 an ounce. Platinum's down $11 at $11.03 an ounce. Copper's down 2 pennies at $2.15 a pound. Light sweet crude down $1.47, $47.05 a barrel. Bonds, the 10-year note up 9 ticks, 132.08. 30-year bond up a full point, 6 ticks, 172.10. King dollar up 32 ticks, trading at 94.51. The euro is at $1.13, and the yen is at 100.28 cents. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We get 2 weeks left before Labor Day. You get a sideways move once again, and the S&Ps were at $218.48. You've done 48 million shares out here. Bottom line, the biggest clue that we actually have, we're going sideways since the 14th of July. 14th of July, we're trading it at 216. We're at 218 right now. Last Wednesday, it's them juicing the way down. And what I expect we're going to see here is that you won't close over this $218.53. You don't close over, it's going to have a shot Tuesday, Wednesday, Thursday to get into this lower price of 217. NDX 100, same setup in the NDX 100. What we have at the NDX 100 is this. Sideways move, you're up 3 pennies right now in the Qs. You've done 11 million shares, and the composite last week made a high, well, first high was made on August 15th. That was 11.7 million shares. Next one came on last Friday, 18.7 million, and then it couldn't hold price. Bottom line, same type of setup. The NDX has gone higher since the 14th of July. The NDX was trading $112, had the next leg up. This has been hanging here for about two trading weeks, 10 days right now. Gold contract, what do we have with gold? Gold volume's not bad, can't hold price. We got down to a price point today of $1,335. That was about 5 o'clock this morning. We're trading at $13.42. You've done 143,000 contracts, which is light volume, folks, okay? So you get the pullback happening with light volume. You went into the swing point. Now, here's where the problem comes. We get 143,000 contracts, which is light in the larger context. It's not light in the context of where the swing point was, because the swing point only had 138,000 contracts. So guess what? It's going to get down to the next level, the lower swing, and the lower swing inside this gold contract, which is from the 21st of July, is $1,318. The correlation inside the silver contract, silver just blew it apart down the bottoms. Okay, took out the full consolidation this morning. The consolidation in silver, the low of that consolidation was $19.27. This just sliced right through it and had the volume as it slices through it. So silver is leading on the way down. It basically took out this consolidation. It looks like silver is on its way now to $18. It was down 40. It's down 43 cents today. That's a big number, by the way. Bottom line, I suspect what you're going to see is that the silver contract is going to grab the gold contract, take it south with it. That being said, good old King Dollar. So check it out. King Dollar, is up slightly, but guess what? It's not getting a bid. I do expect we're going to get one, but thus far it's not there. We're at $94.51. The breakout area from the 24th of June was $93.73. Yeah, the volume characteristic is 66,000. So last week, you came down with 22,000. Going into 66, you need a lot more of that to break it. Bottom line, couldn't break it down. What I expect you're going to see is that we're going to build some cars. That's going to be a sideways movement. See how long it takes in order for the dollar to get strength once again. Over to the bonds. Let's go take a look at the 10-year bond. What we have with the 10-year bond is this. 10-year bond out here today got to a price point of 131.22. The swing low that it was going after was 131.019. So this is where this bond market, man, is going to be so close. And what I mean by so close, it's like calling it like, are you going to do an ABC structure on the way down? Or, in fact, is at the test of that low today and it's on lighter volume? Thus far, the 10-year is saying that that's the low. That's the test of the low. So what we have is this. You got to 131.22. You've done thus far 877,000 contracts. It's like, okay, you're rejecting lower price again. You're 2 ticks away from it. Now you got to give it the benefit of the doubt that, okay, let's see how it handles the 132.15, which is only 7 ticks higher. We go take a look at the 30-year, and what you have with the 30-year is this. 30-year got down to 170.21 today. We've done 180,000 contracts. You're coming into 250. That's also saying, guess what? It just doesn't want lower price. Let me just see something else. Let me take a look at this TLT for a second. So the TLT, which is a 20-year plus fund, plus bond fund. Okay, so that's jumping. The TLT is up $1.17. That's going into 7.9 million shares as well as 8.7. You look at that, guess what? That's telling me, so when I look at the TLT, first off, you're going up, dramatically lighter volume into the top of the consolidation that's been in. And the 20-year is saying that, no, you're going up with dramatically lighter volume. More than likely, you're going to see a failure. That is saying it wants to go back down. When we start putting that together, that's telling me that these bonds do want to go after the swing low and very well maybe an ABC structure on the way down. So it's a tough call right here, right now. Oil. Let's go take a look at the oil contract. What we had with oil, oil's trading at 47.44, down $1.67. That baby's going south with volume. Bottom line, it almost made it to ICE, missed it by 20 cents. ICE is 49.53. Made it up to 49.36 Friday, gave it up on price, gave it up on volume. Oil's going to start back down the other side as it has right now. We're going to be right back, folks. Stay right there.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 15. We get the NASDAQ up 2. S&Ps are off 1.5. And as we do each and every Monday at 20 past the first hour, we have our man, Mr. Steve Rhodes. Now, don't forget, folks, at TFNN, Monday, Wednesday, Friday, we start live programming 8 o'clock in the morning. We go to 5 in the afternoon. Tuesday, Thursday, 7 o'clock in the morning to 6 in the afternoon. Our man, Mr. Steve Rhodes, got a great show on every trading day, 1 to 2 Eastern Standard Time. Now, you can get all of that programming right on your cell phone, folks. On your browser, you go to TFNN.com, and on the right-hand side, just hit Tiger TV. You're going to get great HD quality audio as well as video. Steve's got a great newsletter. As you're over there, you can test drive it right now, 30 days, absolutely free. The way you do that, you're going to go to TFNN. You go to newsletters, trading newsletters. You'll see Mastering Probability. You can test drive it 30 days, absolutely free. Steve Rhodes, what's going on?
Happy Monday to you, Tom. How are you doing?
Happy Monday, third week in August. Pretty wild, man. I'm telling you, time just flies.
Yes, it does. Yes, it does. In a quiet market, and you know what I thought that I would do today is during my show there was a question that came in from one of our listeners, Brent in Martinez, California.
Okay.
And he had asked me to cover light sweet crude, and I just didn't get a chance to do that. I thought, why don't I do that now? Because I know that he usually listens in.
Perfect.
And so the first chart that I've got up on my screen here, a snapshot I took probably about 15, 20 minutes ago, is the October 2016 light sweet crude contract. Now, it's completed an A to B equals CD pattern. So for those folks that are looking at our charts right now, the great thing about an A to B equals CD tool is that it helps us with different price projections. Only 60% of the time is price going to make the 1-to-1 level. And there was a workshop that I hosted for clients a couple of weeks ago, and help them understand the techniques for being able to identify when the market is giving us a signal that it's ready to make a turn. And that's, in fact, what occurred today when we formed the bearish reversal signal. You see, as price was moving up into the $46 level, the 1-to-1 area, no bears showed up, no bearish reversal signal. Price went up to the next level, 47.31, the 1.27 extension of that A to B leg. No bears showed up there, no bearish reversal signal. Price goes up to the 1.618 area, and today gives us that reversal signal. So we've completed an A to B equals CD pattern, but it's also, and what it really is a Gartley sell pattern. So for those folks that are have a bearish bias to gold, the signal today, and what a Gartley pattern does, Gartley pattern says, hey, if we have missed out on a move to the downside, and there's no question from June into the August timeframe, there was a nice move from $53 down to $39 in light sweet crude. And for those that wanted to trade this to the downside, well, today is the day that you have that confirming message, because you've got basically what's referred to as a 0.618 Gartley pattern. And the cool thing about a Gartley pattern, once you're into any trade, it's now then a matter of, let's assume people are short, like Brent was short, light sweet crude. Then it's a matter of managing it. And what we know about a Gartley pattern is there's 5 potential outcomes. Outcome number 1 is the 0.382 retracement of that A to D leg. So, folks, if you're watching this on Tiger TV, I'm really going from the very bottom of the swing point back in early August to the high that was made out here on Friday.
Okay.
So the very first price objective with regard to light sweet crude has moved down to 45.77. If light sweet crude is going to go to its second outcome, there's a price level, and I did a workshop back in February for subscribers where I shared with them what's referred to as the oscillator unchanged line. The oscillator unchanged line helps me to, in an instant, identify whether the price oscillator is rising or falling, because if price is below that level, it tells me that the price oscillator is falling, which is a real issue or problem if that price oscillator is below 0. Now, right now, as we can see on the bottom panel of my chart, it's actually below the 0 line, this red line out here. Now, the price oscillator is still rising. So it doesn't start to fall until price gets down below 45.59. Now, over the coming days here, that number's going to adjust by, 5, 10, 15 cents out here. But if people are listening on the show at 1 o'clock, they'll be able to have an update as to what that number is. But if price gets below that level, there's nothing more bearish than a price oscillator that turns down below 0. So this is going to be really important in watching light sweet crude. Maybe important to kind of correlate light sweet crude to the rest of the stock market out here as well. So outcome number 2 is going to be that 43.55. That's, in fact, if price can close below that oscillator unchanged line of 45.59. So that is a really important level for listeners and for viewers to pay attention to. Now, if price breaks that 0.618 area, this is where Tom O'Brien's system comes into play here, because that says that you would move to the next level, which is the 0.786 retracement. That happens to be that swing point anyways. So that becomes that August 3rd swing point. And that's where we'll understand whether outcome number 5 would really take place, which would be forming an A to B equals CD to the downside. So it's one step at a time.
Yeah.
We know the 0.382 level is really that first move. Then second, watching that oscillator unchanged line. Third, watching that 0.618 retracement level. And what folks want to do is, just like we're watching price move up to the highs out here, the way that we'll know that some type of maybe short-term bottom is in, or just it was nothing more than a retracement, we'll see a bullish reversal signal form. It just always works that way. So it's really helpful to know what levels to be watching, and then waiting for any signals that the bulls or bears paint for us. So that's my take on light sweet crude and what it's doing. So I wanted to be able to pass that on to Brent, because I know that he's listening in on the show out here. And
Nice.
earlier you mentioned, hey, it's summertime. We know it's really sideways-ish type trading out here. And so if I take a look, there's an Australian commodity trader many, many years ago. His name was E.W. Dryce, and he created something called the choppiness index. And the choppiness index is a really cool tool to be able to use during sideways-ish type trading markets. And the way that it's used, I've got this on the bottom panel of my screen out here.
Okay.
The way that this is used is it takes a look at, there's 2 red lines on my chart. The upper threshold level happens to be 0.618. So I like this tool because it uses a Fibonacci level, and the bottom panel is 0.382. And when this indicator gets up to the upper level and then moves back below, it tells us that a trend is beginning. It doesn't tell us which way the trend is beginning, but tells us that a trend is willing to begin. Likewise, when price moves below that 0.382 level and starts to turn up, it tells us that the current trend has ended. So it's a really cool indicator. For example, this last bottom that formed out here back in August in light sweet crude, you can see where I've got the yellow arrow. You can see how price had moved just below that 0.382 level, and then went ahead and moved up. Now, we've had a nice counter-trend rally. This isn't telling us, and it's also, if you take a look at the high that came in on Friday, we can also see that this current trend to the upside has terminated as well. So it's a really cool tool to be able to use for being able to identify when a trend is beginning and a trend is ending, and it really helps inside of choppy markets. So I wanted to go ahead and pass that on to all of the viewers and listeners. So, if they would like to stay updated, just sign up for Mastering Probability. That's a great way to get updated on this tool and what each of the commodities and what each of the markets are doing out there.
And folks, the way you do that, you come over to our website at TFNN. You're going to go into newsletters, trading newsletters. You're going to see Mastering Probability. You can test drive it 30 days, absolutely free. Steve, thanks so much, man. Have a great one. Have a safe one. Of course, we look forward to the show tomorrow at 1 o'clock.
Thanks, Tom. Take care.
Thanks. Stay right there, folks. We're coming right back. Our phone number is 877-927-6648. Be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 10. You get the NASDAQ up 3. S&Ps are off $1.50. Let's go to Dave in Boston. Hey, Dave, what's going on?
Hey, Tom, how are you?
Doing great, man. Yourself?
I'm good, thank you. I'm good. Hey,
Good.
I want to take a look at Facebook, if you would.
Okay, so we know Facebook's going to take over the world between them and Google. So the low is 72, the high's $1.28. Okay, so what are we doing?
I want to go short it. I don't know if you should wait till it goes retest that high, or it's been having a little trouble getting in this 125 area.
No, don't short this, man. Yeah, don't short this.
Okay.
So what you have is this, okay? Facebook folks, bottom line, fundamentally, they got the world big time. Technically, guess what? People are buying it. Every swing point here, man. I got it on a weekly right now. You can see every swing point gets taken out with volume. There's more buyers, man. And you get that. The whole $128, has volume too. It's like, okay, that's going to get tested. Yeah, I wouldn't. I'd stay away from it.
Go through that.
Yeah.
All right. Can you even have time for another one?
Yeah.
Yeah.
Yes.
MUX.
MUX. Okay. So this is McEwen Mining, folks. Okay. It's Rob McEwen is the majority owner of it. Great company. Bottom line is that they are producing right now. They're doing about $14 million a quarter. Now, what are we looking to do here?
Well, that I had that at about $1, and I got out in the 4s, and I want to get back in. I have a little bit, still have a little bit, but I want to get some more. And
Okay,
I want to
so
wait for a retracement.
Yeah, I suspect this is going to. All these golds and silvers want to retrace quite a bit. The volume's light on them today, but they gapped down, they gapped away. With McEwen Mining, MUX, your lowest swing point is 358. You're at 441. It can go for that easy. And I'd let it just let it get down there. I think you're going to see a little bit more momentum in these as they pull back. You got to remember, and I know you know that because you made money on it. These things are up to 250%. So it's been a slow roll, but the roll is happening. There's quite a few of these. Like if you look at Rangel Resources, and folks, this is one of the best equities out here. It's traded at 106, and its high was 126, and it gapped away today. Just jumped ice, man. So it's like this is not, this is an indication that lower prices are coming at us.
Okay,
Cooking, brother.
Thank you, Tom.
Have a great one, man. Have a safe one. Let's go to Tom in Plymouth. Hey, Tom, what's going on?
Tom, how are you doing this afternoon?
Doing great, man. Jeez, you're out here in the afternoon, man. Hey, what's going on? You got a long day?
Hey, I broke one of my rules on Monday. I kept this thing over the weekend.
Okay.
And, I just had a feeling. I felt like I was on the craps table with the, how you get there and the table's lit up and you go the hard ways or something, and I just had a feeling on it. So I said, I'm going to stick with it. So I'm wondering what you think, if we should stick with it through the rest of the day now.
Let's take a look at what we're talking about. And what we're talking about, folks, is JDST. And when I'm correlating to you, relating to you saying that he's up late, Tom is always talking to us, and we love his calls, my son Tommy and I in the morning. And he likes trading these triples. In this particular case, we're talking about the direction 300% bear position of the Junior Gold Miners Index. So JDXJ, I'm going to just go over to what it's trading off. So you can see the correlation. So what happened is this, is that in the GDX and the GDXJ, so the GDX, folks, is the large caps, the GDXJ is the juniors. In both cases, they gapped lower today, and they're going to have light volume. Okay? Now, that being said, Tom, yeah, I would keep the JDST, and this is why. Now, the GDXJ is in the middle of this whole range, and it's like, okay, man, your high has no volume whatsoever, which is 11 million. You're going into the lowest swing point. It's like, okay, this lowest swing point is game now, which is 43.50. And in that context, watch this, folks, okay? So I just brought up Rangel Resources, GOLD, okay? And like, okay, if Rangel was, there's a couple different things happening here. I track a lot of gold and silver stocks because we have the gold report, right? So Rangel was one of the first indications that, okay, we've gone up dramatically. Rangel went from a price point in January of $58 up to $126. So that's a nice run. It was also one of the first ones to turn around and come back down. Now, when that happens, Rangel looks to me like we get another big gap at 101, well, at 95. I think Rangel's going to come into 95 to 101. So when you look at that context, that's saying to me that, okay, we're going to get some more heat on the way down. And if we go right back to your JDST, what you're going to see is that, it's up 25 cents today. You're at 459. Bottom line, it looks to me like, this thing can jump the creek tomorrow at like 470. So I think what's so deviant right now about the golds and the silvers actually is that it's been a slow roll over, but all of a sudden, a lot of these are down 20, 25%. And what I expect we're going to see is that you're going to see the momentum get bigger, and they're going to come back to these June swing areas where they had a huge amount of volume. And, we'll see how it shakes out, but that's kind of what I'm looking at right now. And when you get a slow turn, what happens, folks, is that's when really the most destruction can be done because people don't get out. They think, okay, it's not bad. It's 2 or 3 pennies, 2 or 3 pennies. And then all of a sudden, it's down 20%. And then it's 25%. And then all of a sudden, it's like, oh, man, here we go. I got to get out of here. So I think you get action, man.
Yeah, that's great advice. I'll keep my eye on it. And, hey, if it goes down tomorrow, man, buy some more. Who knows?
We'll talk to you. Well, bottom line, you want it to go up, and we'll talk to you tomorrow morning, man. I think you're going to have action, man, because this move out here, what's really weird is this, folks. So picture this. The dollar is not strong, okay?
Yeah.
It is not strong. And gold really hasn't come down. It's only down $3, but these equities have got killed. They're down good, so it's like, okay, so someone is selling these equities, and it's not you and I. It's some monster, some operator that's in there that's selling them. What we will get today, too, is that, now I won't get this to 8 o'clock tonight, but we're going to get the volumes on the XAU and the HUI. The XAU and the HUI, they both broke their swing points from last Thursday. Last Wednesday, rather. Last Wednesday. And, like the gold bugs the XAU, right now can't even get into the lows. It's at 105.81. If you close below 106.60, which it looks like it's gonna, next stop for that XAU is down at $98. And the gold bugs index, if we take a look at the gold bugs index, what you have, you're at 262. And your next stop down there is, down at 246. So, I think it's
$20 in the morning.
That's it, man. And then for all you metal folks out there, you got to keep your hands in your pocket till we get to lower lows, and we'll be the only one having money buying in. So it's a beautiful thing. Cooking, brother. Talk to you in the morning, Tom. Have a great one. Have a safe one. We're coming right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And folks, as you come over to our website at TFNN, you're going to see right in the top of the carousel, our man, Mr. Larry Pesavento, is going to be doing a workshop for his subscribers. Larry's newsletter, folks, is called Fibonacci 24/7. This subscriber event is going to be Wednesday night. What he's going to be talking about is the classic techniques of the old masters. You can come over to our website. You can get his newsletter for 1 month. That's the cost of $97. It comes with a 30-day money-back guarantee. You'll get the newsletter for a full month. You're going to get a great workshop, which is coming on Wednesday night, 5 to 6 o'clock. Larry's going to be talking about how to build a strong belief system in your trading, how to use multiple time frames and pattern recognition. Larry's a pattern recognition expert. Proper use of stops, the lost art of tape reading and how it applies to electronic trading, how to find the patterns very quickly. What is going to happen also is our man, Mr. Larry Pesavento, is actually going to be in-house in the next hour. He's going to be here, so if you do happen to be either in your car or you're getting out of your car, remember that you can get us right on your phone. You go to TFNN.com, you hit Tiger TV. Okay, so now check this out. I got to read the story for you because this just came across the headlines, right? Chip stocks rally, disturbing peace in the calmest August since 1994. A rally in chip stocks is one of the only things to get excited about in a market that is indifferent to just about everything. Gains in the Philadelphia Stock Exchange Semiconductor Index are starting to take on historic dimensions. The gauge is up 20% this year after capping an eighth straight weekly gain, the longest in 2 years. A ninth would be the longest since 1995. Amidst the calmest August since 1994, Stratogas Research Partners sees reason for optimism, going as far to frame the rally in semiconductors as part of the Dow theory for electronic age. According to this New York-based firm, an argument can be made that the pervasiveness of microchips makes them the same kind of bellwether for growth that railroad stocks were when Dow theory was formed a century ago. Okay, so I'm going to have a different take on this, folks, okay? See this 1994? And depending on how long you've been listening to the program, I brought this up a few times in the past in this particular market and how it's trading. And this is what it is. In 1994, the market had been moving pretty nice, and we were at much lower numbers. It was moving like every day, you know, up 5 points, 10 points. Okay, you got to remember here. I'm going to bring this back so you can kind of get it in a context what numbers we're dealing with in '94, because I remember this so well, and you'll see why I remembered it so well, because '94. Okay, here she is. Okay, so you go back to '94, and in '94 the S&P was trading at 435. Okay, so what happened is that '94, you know, the lows of '94 was 436, Market just keeps going up, 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 real steady, real nice, no big deal. Goes up to 477. Starts moving sideways. And then you just had 94. No, that's from the bonds. Okay, so what happened in 94, this wasn't the S&P. In 94, the bonds got croaked. And what it was is that, what I was going to tell you is that, and from 94 to 96, we had an expansion of price, and it was moving up slow every single day. Well, what happened is that the S&P in 96 went from 681, and it pulled back to 605. Now, that's only 80 points, okay, and an index that was trading at 600, so approximately 12, 15%, right? Well, guess what, folks? That pullback there wiped out so many people, because what happened is that it was so calm and it was just like every day going up that they couldn't handle a pullback of like 12 to 15%. 681, now 605, 70, yeah, 75, that's not even, what's that, 12%. So the danger, when I just saw that of 94, I'm saying to myself, so the danger right here also is that when you have a market that has been a one-way market, which we're in and have been in since 2006, really, you get a pullback just of 10% and it stays there, it's like, oh, baby, watch out. And, you know, we've certainly, every time that you've got a small pullback, whether it's last August, and it comes right back, and then, of course, the last one was, when we just look at this, you know, at the beginning of July, you get, you know, shakes it off again. That gives the bulls that much more confidence that, hey, listen, as long as the Fed is out here, we have free money, we're just going to keep buying, and every correction is going to turn around and come right back up. Well, that's not how markets work. And my point in all of this is that, yeah, as one of the Tigers said, the Fed has canceled pullbacks. And that, listen, that's been on the table. There's no doubt about that. That's been on the table, is on the table. If we go over to the Nikkei, now in the Nikkei, which is really wild, the bottom line is that the reason I'm bringing it over to the Nikkei quick is this, is that the Nikkei, they not only buy bonds, but they buy all the ETFs, folks, okay? But if you look at the Nikkei, well, guess what? They're buying everything, and the Nikkei in August of last year was still at 20,900. Well, the Nikkei is at 16,500. Guess what? Even if the Feds or their central bank comes in and continues to buy, for some reason, the market is bigger than everyone. Feds, once it starts happening, and the door shuts. And when the door shuts, the elevator goes down and no one can get out. So we'll see where the rest of this does shake out. But we're certainly at highs right now. You're at highs with light volume. You've already had a few downdrafts that have had the juice underneath it. And, you know, we'll see how this shakes out in the next few weeks. What I do expect is this. You really only have a shot to pull back tomorrow, Tuesday, Wednesday, and Thursday of this week. The reason I'm saying that is that as we come into next week, you know, August 31st is on a Wednesday. So you'll get some window dressing at the beginning of next week. You have Labor Day. You get some natural buying in the marketplace, and things are going to be slow. So if there's going to be a pullback, it's going to be Tuesday, Wednesday, Thursday. By Friday, things are on vacation again. Next week, I suspect vacation will stop probably on Thursday, even though Labor Day is not until Monday. You know, so that's kind of how this is laid out. What we got to see out here today is that the UK, that couldn't hold price. UK was as high as 68.84, ended up closing at 68.28, gave up all its gains. The DAX in Germany also gave up its gains. It brought people in at 10,600, ended up closing at 10,494. In that case, in the DAX's case, the DAX is a big deal because what had happened is that the DAX broke topside in a big way on August 9th. That's where it went from 10,400 up to 10,007. Now what has happened, you're back at 10,400 again. So if the DAX gets back inside 10,474, which is $20 below where it's at now, that'll be a monster failure on price, and it looks like on volume also. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back in. Dow right now is down 17. NASDAQ is up 4. S&Ps are off $1.50. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go over to the IBB. So the IBB got some juice in it today. You had a couple takeovers. And what you're going to see, though, is that the IBB is having a hard time holding its downdraft. And the downdraft that we're talking about is the aspect of how it came down on the 8th of August from $298 to $293.15. Now, the kick is going to be here. Can it hold the $296? And I think it's $296.23. And it doesn't look like it's going to hold that area. You had inside the NDX 100 today, big numbers. INCY was up 7.7%. Biomarin was up 6.6%. Regeneron was up 3.4%. And you had Alexa Pharmaceutical up 3.1%. So if we do go over and take a look at one of the larger ones out here, which is Regeneron, it was up $14. Had volume out here of 275,000, but guess what? You're going into 648,000 on the way down. So it's going to be interesting to see. Regeneron had hit 422.41. You're at 418.38. This won't be a rejection yet, but bottom line is that it hasn't broken its downtrend that started the last time that it was at that 433 number, because that 433 number also was only a counter trend bounce. Regeneron had a high of $605. That had gone up to ice. It couldn't handle ice. Pulls back. You get a consolidation in place right now, and we'll see whether that can handle that whole area. What we did have out here is that the Exxon Mobils of the world that got to lower price, rejected lower price. We'll see how it can handle the top. But Exxon was down 86.84. It's at 88. Chevron, yeah, Chevron's going sideways. You know, Chevron can't handle the higher price either. So it looks to me that, you know, you're going to see the oil market continue lower. Somehow we'll find out what will put some juice inside the dollar. You know, the dollar, bottom line, has to catch a bid. Hasn't caught a bid yet. It's not. It certainly hasn't helped the commodities. Without the dollar being higher today, you have a lot of selling inside the commodity market. You get crude down, you get gasoline down, silver, wheat, hogs, copper, aluminum, orange juice, corn. Coffee's taking a hit. Coffee's got a hit on the way up. That's up 3.3%. You get sugar up 3.2%. Natural gas is up 3%. Cattle's up. No, that's flat. So it is unusual when you see the commodities actually taking a hit without gold, without the dollar index getting into higher price. And more than likely what I suspect it really has to do with, if we go back over to that bond market, what you're going to see is that the notes and bonds, they're up. Notes are up 9 ticks. Bonds are up 1.5 ticks. They want lower price, and more than likely what we're going to see is the notes and bonds spook the broad market, you know, whether the Fed wants to go up or not. The odds, the betting odds, meaning trading on the futures, the probability right now for the December 14th area is 50.9%. Now, this changes really quickly, you know, because each and every day people are trading off of these numbers. When I look at the fundamental of the way the numbers are coming in, it's like, you know what, they can go up a quarter point and a half beat and a heartbeat with the aspect of saying, okay, one and done again. Okay, we felt we had to go up one, and we'll see how it lays out for the next 4 or 5 months. Where the market would absolutely freak is that they go up and they say they're going to continue to look at it every quarter. If the Fed says anything like that, folks, bond market get out of the way, everything get out of the way, because I don't see that happening now. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials down 25. Nasdaq's up 4. S&Ps are off $1.50. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
We got Carlos from California. Carlos, what's happening?
How you doing, Tom?
I'm doing great,
How
man.
are you?
Yourself?
Oh, very well, thank you.
That's awesome,
Thank
man.
you very much. Can I make a comment real quick?
Absolutely.
For me, it's a real challenge every time I'm doing a trade. And thanks to your help, I've been able to done a lot of things as far as trading. And I know there's a lot of Hispanic people who's listening, and they think this is a lot harder than it looks. But with your help, it's been a lot easier to make things sound very simple.
That's a beautiful thing, man. Well, listen, we appreciate it. We appreciate it.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always do your best. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully alive in the moment. Letting go of the past means that you're going to enjoy the dream that is happening right here, right now. Yesterday's gone. Tomorrow's not here. what are we all doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials down 23, NASDAQ up 6, S&P's flat, gold contract down $3.90, trading at $1,342 an ounce. Silver down 42 cents at $18.89 an ounce. Platinum down 11 bucks at $11.02 an ounce. Copper down 2.5 pennies at $2.15 a pound. Light sweet crude off a $1.47, trading at $47.05 a barrel. Bonds, 10-year note up 10 ticks, 132.08. 30-year bond up a full point, 7 ticks, 172.11. King dollar up 27 ticks, trading at 94.51. The euro is laying out here at $1.13, and the yen is at 130 pennies. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. Sideways move, no volume, 58 million shares. Same type of movement we've had since the July 14th level. What does that say? It says that, guess what? We're 218.53. We'll see whether we're going to hit the 217 first. I suspect we're going to. Why? Because last Wednesday we had some juice on the way down. Hasn't been able to handle the lows of the high. The lows of the high, folks, is $218.88. We made it to 218.80 today. Gives it back. Subtle, but bottom line, gives it back. NDX 100, same type of setup in the NDX. You're up at highs, dramatically lighter volume. You get 14 million shares traded. You're at $117.35. And what the Qs say is that the Qs can test the $117.97, which is the high that was generated on August 15th. Gold contract. What do we have with gold? Bottom line. Now, this is where this gets. This is really unusual. So gold, folks, traded down to $13.35 today, and the $13.35 number you're talking about, that number was hit at 12:30 last night. When most of us are awake, bottom line, gold was trading, from the 1340 level to the 1345 level. Well, that being said and done, what we had is this. You've done 147,000 contracts. That level there, okay, is trying to get into the lowest swing point, and this is where it's subtle, but guess what? That lowest swing had 138,000. So that's saying that you actually are coming into that level, slightly higher volume, and then if we go over to the silver market, folks, the silver market today talked, walked, and squawked. And what it did is this. It goes down 43 cents. Volume blows out of the silver market, takes out the whole consolidation. The consolidation that we're talking about, this consolidation was in place since July 5th. The bottom of that consolidation was $19.27. It does 88,000 contracts today, takes it out. That's saying silver wants to get down to $18.07. Now, if you have silver running down to $18.07, that's going to take the golds, that's going to take the silvers, that's going to take the whole ball of wax downtown. So the divergence out here is that gold was only down $3.90, yet the XAU, the HUI, they both took out their swing points. I don't think they're going to have the volume. I won't get that to 8 o'clock tonight, but they both gapped lower. They jumped ice, and it looks like they're going to go after their swing points from July 25th. In the XAU case, we're at $105. That's $98. And the gold bugs index, what you have there is that we're at 262, down 550. The lowest swing point is 246. So I suspect it's going to make its way down there. Now, let's go to the bond market, because notes and bonds, folks, okay, bottom line is that they did reject lower price out here today. They had lighter volume. That being said, they still look to me that, number one, they'll try to get to the higher end of this consolidation first, which is in the 10-year, maybe 132.20. But what you have is this, is that you have this lowest swing point out here from the 21st of July. And what it looks that it's doing, it looks like it's building cause to get down into that area, at least test it. We'll see whether it can break it. Now, we only missed it by 2 ticks today. So that's saying that, guess what? It wants to go higher first before coming back down. But it looks to me like it's going to be the notes and bonds that more than likely will spook the market regardless of what the Federal Reserve is going to do. Good old King Dollar. We go to King Dollar. And what we have with King Dollar is this, and this is what was unusual also, is that King Dollar didn't catch a bid into higher price today. King Dollar at one point was up 94. Thin volume, only 13,000 contracts. What King Dollar had done last week, though, is this. King Dollar had rejected lower price. It's going against the Brexit day of the 24th of June. So the low of that day is $93.73. We had 66,000 contracts. Bottom line, I expect we're going to build some cars here for the good old King Dollar to make it back up into higher price once again. Oil. What do we have with the oil market? Bottom line, oil market just about made it to ice last week, gave it up in spades. Oil pulls back today at $1.47. The top of ice was $48.94. Oil made it up to this $48.75. And what you have here is that is right where oil had come down almost $3 that day on July 5th. We went from, well, it did come down $3. We went from $50 to $47, $50.03 to $47 on this contract. Had the volume. That's where the supply line is, and that's where more than likely the producers are selling into this market, and it looks like they sold pretty quick. So we'll see if we get any follow-through inside that oil market. If we go to the XLE and do the correlation between the oil and gas sector, the XLE failed. You know, it got over the highs that were generated out here from June. Bottom line, gave it up in spades, and it's back inside the lower price consolidation again. That lower price consolidation said it can get down to 65. You stay right there, folks. We got our man, Mr. Larry Pesavento, coming up. It's a beautiful thing. He's in studio, growling and prowling with us. Dow right now closed down 23. NASDAQ up 6. S&P's flat. Stay right there. Larry and I are coming right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and we get a great surprise too. We get our man, Mr. Larry Pesavento, in-house growling and prowling with us. And Larry does a great show every trading day right here, folks, 9 to 10 Eastern Standard Time. And, of course, you can get it right on your cell phone. Bottom line, guess what? Larry's going to be doing a workshop. The name of the workshop is The Classic Techniques of the Old Masters. It's a subscriber event. Larry has a great newsletter, Fibonacci 24/7. You can come over to our website at TFNN. It's $97 for the month. It comes with a 30-day money-back guarantee. You're going to get a great newsletter for the month. You're going to get a great workshop Wednesday night. And so let's talk about the workshop. Hey, how you doing, man, anyway, first
good,
off?
yeah.
You look awesome, man.
Yeah, well, when you get to be old enough, you've only got 2 ways to go. When you're in a 7.5 furlong of an 8 furlong race, you've got to be careful. But
I think you got a good 12. I think you got a good 12 furlong race.
Oh, I don't know about that, but it's been.
It is a trip because you never know, right?
Yeah,
I mean, you never know,
see
man.
The dude today from the PGA that died at, 64 of a heart attack?
Oh, it's sad.
No, really
I know.
You just never know.
And we're so lucky because bottom line is that we're in the market, you know?
Well, that's the fun part of what I've been doing for 55 years. This is what I've been doing all the time, and so I'm really never on vacation because it's what I really love to do. The whole family loves to do it, so we're always following the markets and stuff. So it's
which helps tremendously.
Yeah, it does, and we also get to see different parts of the world. We've been everywhere, which is great.
Sure.
And, this particular show that we're going to do on Wednesday is sort of special to me because, I have a lot of very rare books that I've looked at over the years. And what I decided to do was to take the 10 books that probably meant the most to me and excerpt some of those things of patterns and some of the things that people worked on as far as accumulation and distribution. And one particular area that I don't usually follow as much as I should is what do you do when things go wrong, when patterns fail, because some of those can be your absolute best trades. If you think you're going the wrong way and it goes the other way, then you've got a really good opportunity. So I'm going to focus a little bit on that also. But it's going to go very quickly. I put a lot of things together for it. And I put a list of the books that I liked, and which is good. And when I was doing it, Tom, I remember going into Don Mack's office and pulling out these old rare books one after another to see what was in them, Right. And I skimmed through so many of them because I was basically looking for pictures I can understand, the patterns real easily. And so those were the books, that meant the most to me. And then, of course, I was able to meet John Hill back in 1970. Who was also very interested in
and we've had him on a couple times.
Yeah,
you had him on. He was on. All three of us. That was right.
Yeah, he's
still kicking down.
He's 89 years old down in Hendersonville, North Carolina, trading all the time with his son Lundy.
Right.
His daughter Holly, she trades out of Connecticut.
Okay.
And his son John also trades out of Chicago now. He was with Tony Crable for a while, but he does his own stuff now out of Chicago. So
that's awesome.
It's been a really good. Many years of knowing these people.
So intriguing. When Tommy was talking with you, and we were talking, he had told me what you wanted to do, and it was so cool, man, because it seems to me that technical analysis, it blew up. Well, to me, in the 20s and 30s. I mean, people would say that there was nothing in the 20s and 30s. But that's when it seems those guys, they had so much information. Like everything's been built on top of that. Do you know what I mean? Then there was like a lull, right?
It was, but the problem was it was in a closed environment. Only the people on Wall Street and a few people in Chicago had it. I mean, there was not. We didn't have the internet, and they didn't have the publishing and stuff, and there were very few books. The really explosion started. Actually in 2000 when Andrew Lowe came out with his book, The Non-Random Walk Down Wall Street, where he basically proved that the patterns work. and that they are predictive within nature or within reason.
Yes.
And that's when we start seeing all of these charts on Bloomberg and CNBC and Financial Times, more and more of them. And now you see a chart for everything. I mean, it's just one after another. And but Andrew Lowe was the one that really pushed it into the area. But remember, Tom, it wasn't until 1983 when we first started getting our own charts that we could actually see on those little 11-inch computers. If you remember, I don't even know if you were trading then or not.
I wasn't. Well, my first my first trade was 1981, and that's when I was trading bankrupt bonds, right? Yeah. But what happened there, of course, I was the market. So that's not even like trading, folks. Okay, it's like a Goldman. I was making money on the spread every time, and then a guy that worked for me was in the futures pit, right? And I always wanted to trade orange juice, right?
Oh dear God.
Did I tell you the story, right?
No.
Oh, this is sick, folks. If you haven't heard the story, so what ends up happening? I'm making plenty of money, and I'm thinking, hey, you know, when you're making money, you think you make money doing everything, right? So I said, okay, great. So we downtown Boston. It was Prudential Base at that point, and they had metal chairs in the place, right? Go in the metal chairs. It was $3,000 for the contract, right? Give him the contract. He says, okay, we're going to buy orange juice. I buy orange juice. He comes back at me. I am not kidding. 30 to 45 seconds later, he says, I need another $3,000. It went the wrong way. I looked at him. I said, give me my $600. I'm out of here. Isn't that sick?
Oh yeah.
Well, so folks, don't go do something that you don't know what you're doing. Okay? Because and so that was January 15th of 1981. Isn't that sick?
That's true. Well, you remember the movie Trading Places? They used orange juice as the modem for all the shenanigans that went on. But actually, it was the silver pit where that was really done. All the traders were in the silver pit that they did it. But orange juice was basically, for many years, controlled by one family, 2 cousins, a couple of nieces and nephews, and so there was virtually nobody in the pit. But there's more liquidity now because they have ranches in Brazil that are bigger than anything we have in Florida. So it's just huge the amount of oranges that are out there. So.
Yeah. So when we talk about folks, the workshop is this Wednesday night. It's from 5 to 6 o'clock. So tell the folks a little bit. I mean, I love pattern recognition, and I think I know the one thing I absolutely love about it is that at certain points, you know when it's wrong, when it comes in wrong.
That's the beauty of it. Yeah, right. You don't have much of a tolerance because we look at certain ratios, and the key ratio is one of the things that I focus on in this webinar is the 1.618 because that's the moment of truth. Beyond that, we don't know where it's going to go. If we look at the Fibonacci spiral, that goes around and around, at the very end of that is 1.618. So if you go beyond that, you're looking at 2.618, pi, 3.14, 4.2. I mean, it never ends. So once you go past 1.618, you're in trouble. But that also tells you that if it stops at 1.618, you've got something that really means something. And that's what I try to do on the examples that I'm showing, for Wednesday night of some of the things currently that are happening that way. And it's there's a bunch of stuff happening that way now too, so it's going to be interesting.
You know what I found out, and folks, if you're into patterns, if you're into Fibonacci sequence, up or down, you should come to the workshop. Period. Where I've got helped tremendously is that the 1.27, if it goes over that, man, all you have to do is do the math and say, oh no, is this going to go to 1.618? Like, that's too far. Do you know what I'm saying?
Sure.
So at certain points, when we go over that, I say, okay, man, I got to get out. Because the next level up, folks,
you're absolutely correct.
That's a big percentage move, man.
That's what we call, that's what we're going to focus on, are those failed patterns when you go beyond those other. And that gives you an idea sometimes, because if you get to the 1.27 level too quickly, that's a big danger sign. You're driving your car and you got a little too much gas.
Right. Can you stay another segment? Is that cool?
Sure, yeah.
Awesome.
No problem.
Hi, Earl. We got Tiger Earl out here. You're looking good, brother. Good to see you. You stay right there, folks. Larry and I, Earl, we're coming right back. Our phone number is 877-927-6648. Coming right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Larry Pesavento, Tom O'Brien. We do appreciate you growling and prowling with us out here. Don't forget, Larry's got a great show every trading day, 9 to 10. Our man, Mr. John Logan, kicks us off. And I love how we get kicked off. Between you and Logan, I mean, you've been doing this a long time, you know, and you know that before the market opens, it's nice to be prepared, right?
Oh,
Isn't it?
sure.
I mean, it's pretty cool.
Yeah.
When you think about how we met, you know, I was asking you like 10 years ago, can you do a show? Can you do? And then kind of we put it together, which is, and I really appreciate it, man, because it is great information, solid information, you know, every day.
Well, it forces me to do the work. I mean, I do the work anyway, but, you know, when I have questions from the people in the den, they got some really smart people in that den.
They do.
I mean, it really is really amazing, the quality of the questions that they have. Unfortunately, we've been able to have some guests that people like and do a great job and really good. So it's makes it interesting
so,
to
hey,
do it.
let's talk a little bit about this S&P. So that little S&P's been hanging up there since July 14th.
Could we pick a subject I know something about?
I know.
No, I you know, we're in an area we've never been here before.
Yeah.
This is absolutely historical. Now, whether we go back 50 years from now when we're gone, someone will be sitting here talking about this particular formation or not, I'm not sure, but it will be record-setting, and just from past experience, it's not going to end well.
Right.
You know, because you watch these people on CNBC and Bloomberg. I mean, you know, they're 22, 23 years old, and they've not experienced anything. In fact, one of the comments that one of the people made yesterday, I believe it was Art Cashin, he said there's no value in experience anymore. No one really,
that's good to hear.
No one really cares what's happened in the past.
Yeah.
And we know everything that's happened in the past happens again. But this is a different type of a topping pattern than we had in 2000 and also in 2007, and also if we wanted to count 1929, it's totally different. But the main thing is that we just don't have any market participation.
Right.
I mean, we haven't no volatility since July 5th. I mean, nothing.
Yeah.
It's the euro moves more. The euro versus the U.S. dollar moves more in an hour than we do in the whole day in the stock market. So,
listen. It's
amazing.
What's going to be intriguing here, and folks, Larry and I, many times he's been on the phone, with me, because many times we're in the right. Well, we might be in the right or the wrong side of the market. We're both on the same side of the market, and what happens, what you're hearing more than anything, is that, we understand that, yes, markets can go a lot higher, but what we also understand is that on the basis of when you stay up here and everyone gets placated, and we're looking at it technically, but when it gets placated, it's better. Because what happens is that wingtips always come back. It's one of those deals, right? I mean, it is. So it's going to be intriguing, He's talked about wingtips. I have a nephew who is 39 now, and he has a pair of wingtips that I gave him when he was like 13. Look at that.
Yeah.
Tommy gave it. I got a great pair of brown wingtips. It's a beautiful thing. Okay. Hey, we're going to talk bonds. Let's talk bonds. Is this sick or what?
No, bonds is where the big problem is. I mean, stocks is nothing, but when you talk about a market that's trillions of dollars bigger than the stock market, that's where the problem is. Everybody's worried about how much money they're going to make on the return on their investments. You got to be return of your investment. How do you get the money back? And it's going to be difficult.
And what's intriguing here is that this is the first time that I've seen that it may do an ABC down, but it's like, okay, man, anyone that gone on the one side of this, who would ever think that we've just continued to go up like this? I mean, you look at these negative rates, it's like, okay, man, I understand it, but this is going to be intriguing, man.
Well, several of the people in Den asked me if I was here to take a boat ride.
I got you on the boat ride. I know you and Earl got something to do this afternoon. We're taking that boat ride, man. You get Sarah. We're going, man.
Earl was with me the last time. It was about 8 years ago when we had that full moon and the water was coming over the deck. Yeah.
Oh, get out of here.
Man, we were as close to death as I've ever been.
Yeah. Oh, my God. You're so funny. Hey, the thing that's going to be amazing, though, is to really watch. I think, so check this out. It seems to me, and I mean including myself in this, we're all so used to money for free now. And it's like, oh, what's going to happen? Mm-hmm. Do you know what I mean? Because I wasn't used to money for free, let's say even a year ago. Yeah. Now I'm saying, hey, this is kind of cool, man.
Are you getting money for free?
Yeah.
From who?
Well, it's not free, but it's cheap, percentage rates.
Yeah, it's cheap.
That's almost unheard of. Do you know what I mean?
Well, certainly unheard of.
So it's like, okay, what's going to happen when it goes up? Now, Tommy's generation, 36 and younger, they've never seen interest rates even at 5 or 6%.
The millennials, is that what they are? Yeah. Well, they'll probably get used to it. Who knows? But zero interest rates make no sense to me. I don't understand how anybody with a IQ of higher than 6 can even comprehend why anybody would loan somebody a negative interest rate.
I know.
That doesn't make it. But Japan's been getting away with it for a while.
Yeah.
And a third of the free world is under, their negative interest rates. And we're the greatest country. Well, I shouldn't say that to everybody, but it's one of the greatest countries in the world. And here we have one of the highest interest rates. So that's really really amazing to me why it happens that way. It should end badly, but whether it does or not, we'll have to wait and see.
But see, you only say that all the time. You know that it will.
Well, eventually I'm going to be right, Tom. God, give me a break. I've been saying it for 7 years, for heaven's sakes.
No, not really. I mean, I guess what folks you should also understand is that when you're in the market for long periods of time, and Larry's going to be having a great course Wednesday night, is that when you can look at a lot of different things, meaning whether it's the currencies, the equities, other commodities. I know you love currencies and commodities. You don't have to be trading, something that just continues going up. That's the other side of it.
I hardly trade the S&P anymore. For the last 3 months, my biggest moves for the service have been in bonds. We had a really good move in gold. We had a really tremendous move in the British pound during the Brexit. And it's been and crude oil. We've been very good in crude oil.
I mean, you saw what oil. I mean, the silver market did today. This looks like we got a pullback happening here, man. That broke down. You know?
It certainly did, and it looks like it's heading for 1,800 even, and that would get us the gold down to probably. I'm hoping that, well, I shouldn't use the word hope. That's not a very good trading word, but I would like to see gold to get around 1,290. That's about, $50 from where it is now, but that could easily happen.
No,
that would be equivalent to $5,000 in silver, so that could happen on a quick move.
That's right, and right there, one of those swings is 1288.
That's the old breakout high?
Yeah.
Sure.
And what's intriguing about this, folks, what you hear, and Larry and I both love gold, but as you're trading, you want to be able to go on both sides. You want to understand that, hey, you're at highs, take your money, man. Things don't go up forever, And that is always like a little bit different in the metals market, but they don't. Like nothing is up forever. Nothing is down forever either,
Well, sometimes we think that, but they can always run out of money before you can think where the top or the bottom is in. People should remember that only one person gets the high tick on the upside and a low tick on the downside. The rest of the time, we're all in the middle anyway. So it's try to wait. That's one of the things I'm going to try to cover in the webinar is how to use accumulation distribution using candlesticks to give you an idea that this may be an area. You never know for sure, but you try to put the odds in your favor a little bit.
And that's what makes the Gartley so great, too.
Oh, yes.
You know what I mean? Because what ends up happening there, folks, there's a lot of different patterns that Larry's going to teach you. And guess what? The reward versus the risk is very minimal. Well, listen, man, I love that you come in. You look great. Appreciate you growling proud with us. Thanks, Earl. Appreciate you growling proud with us out here. Okay,
hey,
brother.
Thanks a lot, Tom.
Thank you,
Thank you.
You stay right there, folks. Be coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. And don't forget, folks, every trading day right here at TFNN, Monday, Wednesday, Friday, we start live programming 8 o'clock in the morning. We go to 5 in the afternoon. Tuesday, Thursday, 7 o'clock in the morning to 6 in the afternoon. Now, we take all that programming, we replay it, get it right all on your cell phone at TFNN.com. I'm Mr. Larry Pesavento. Huge amount of experience, folks. Going to be doing that workshop this coming Wednesday night, 5 to 6 Eastern Standard Time. You can come over. You can get his newsletter right now. The newsletter is $97 a month. It comes with a 30-day money-back guarantee. You like it, great. You keep it. You don't like it, just tell us. You get your money back. You're going to come to the workshop. You're going to learn a huge amount about patent recognition, and I suspect you're really going to like it because it's something that is nothing's easy in the marketplace, but they are defined patents, and what's so cool about it is that visually they're easier to teach visually. That's what, and then mathematically you can go through it, but visually you see them line up and say, okay. And what also happens is this, is that you know the number of the patent of where you want to buy or where you want to sell before it gets there. So what happens is that you're setting the patent up, you're saying maybe this and maybe that. Well, guess there, you sit there, wait. If it comes to that number, then you get action. And that's really cool in that aspect. Let's go overseas. We go take a look at overseas. So what we had last night overseas is this. You had the Nikkei was up 0.5%. Shanghai was down 0.7. Bottom line, you had a mixed market in Asia. That being said, in Europe, you didn't. In Europe, what we had out here is that it's not that Europe was down a lot. The FTSE was only off 0.4. The DAX was down 0.4. What you had is that neither the FTSE 100 or the DAX could hold higher price. The FTSE got up to a price point of 6,884. You closed at 6,828. Bottom line, that's saying it's going to try to break into its lower range where it broke out of. And this is where the big deal comes from. The FTSE broke topside, folks, August 5th. Goes above the range. The top of that range is 67.80. Now, right now, you're only $50 away from it. I expect it's going to go after it tomorrow morning. If you get back in that range, guess what? Lower range is going to be a failure on price, a failure on volume. The DAX was more pronounced. And what the DAX was is this, is that on the 9th of August, the DAX goes from 10,400 to 10,700. Monster move, right? Stays up there for 5 days, and guess what? Today, it goes from 10,650 to 10,440. Bottom line, comes down with a vengeance, and right now, it's approximately 20 points above the lower trading range. Now, the deal here, the lower trading range, if it gets inside there, which I expect we're going to see tomorrow morning, well, that lower trading range goes down to 9,200. That would be a hit. You're talking about $1,200 on the downside. So it's going to be wild watching that whole thing shake out. If we do go over to the Nikkei for a second, go back to the Nikkei, one of the targets just came up with something that's pretty cool, and there's no doubt. What you had over the weekend, folks, is this, is that you had Stanley Fischer, who is the vice chairman of the Fed, come out with the speech. Bottom line, inside his speech, he was saying that, hey, listen, the Fed, we're coming up to a lot of numbers that we were looking at, and things are looking pretty good. Simultaneously, so that basically tweaked the dollar a bit, meaning put a little juice underneath the dollar. Not much. I mean, to me, the dollar was weak out here today. It also backed gold off, but you can see it only backed gold off by $3, which is nothing. Silver it destroyed. Silver, come down hard. That being said, you had the Prime Minister of Japan, Kuroda, come out, the Bank of Japan, that, hey, guess what? They, are looking that they can put more stimulus into the market. And now this is going to be bizarre. So check this out, folks. This is where this is going to get really wild. Is that in both cases, you're talking about and this doesn't happen a lot, that our Federal Reserve and the Bank of Japan simultaneously have them meeting on September 21st. So September 21st is going to be a big day. And what has happened is this, is that the yen, when they say that, bottom line, they're going to put more stimulus into the marketplace, the yen should get weaker. Well, their problem is that the yen continues to stay strong. So in the last 6 months, let's do the last year. In the last year, the yen has just gone from 123 down to 100. A lower number in the yen means that it's much stronger because it's 100 yen versus $1 versus 123 yen to $1, okay? What that does is that makes it much harder for Toyota, Mazda, pushing cars out, pushing any type of product out of Japan to other countries. So the correlation is that when he says that, okay, I'm going to put more stimulus out there, guess what? They need another wrap, folks, because it certainly has not helped the yen. Now, that being said, if we take the yen and we bring this back, what you're going to see is that the yen, it looks to me, made its low, and that low was generated out here in 2011. Because if we take a look, it had a heck of a run off the bottom. And if we take this run right now, what you're going to see is that right now at 100, at 100.88, that's a 50% contraction of the move off the bottom. Well, what happens is this. If you do a 0.382 contraction off a leg up, that's showing that something is really strong and then it starts moving up again. A 5.0 is a normal correction in a market that very well may go a lot higher when you're talking about where in 2016, the yen came off the lows of 2011. So that's a normal correction. You can, however, go to a 0.618, which in this case, a 0.618 would be 95. Well, if we go to 95, you're going to see gold to the moon. But I suspect we're going to try to hold 100. My point is this, is that 95 would still be, it'd have to break 95 in order to break the uptrend. And right now, we're at a 50% correlation of that move. So, we'll see how this shakes out. In our own dollar, if we go over to our dollar, what you're going to see is this. And this is where some of the divergence was today. The dollar didn't catch a bid. The dollar only had 13,000 contracts. And, it's at 94.50. We'll see whether it can get inside 94.94, in the next few days. It got stopped in its tracks, and 94.94 was the low that was generated out here on the 2nd of August. So I suspect it's going to have to build more cars to get into a higher price. Not quite sure, when you take a look at the gold contract, is that, couldn't catch a bid whatsoever. Now, what we do have is on Friday, you're going to have Janet Yellen speaking there's a forum in Jackson Hole, and it's normally a big forum. It's put on by the Kansas City Fed. The theory is that Stanley Fischer wouldn't have been talking about the aspect of he thinks things are looking good when he's the vice chair, if in fact Yellen wasn't going to be coming out here saying probably the same thing. You stay right there, folks. We'll be coming right back. Dow finished down 23, NASDAQ up 6, S&P's down 1.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com Under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. And if we go over to, so check this out. This is pretty amazing. And I don't believe that this is the guy that was in the middle of this debacle, our housing debacle, but he came in afterwards. But so Daniel Mudd ended a 5-year fight with the U.S. government Monday after the former head of Fannie Mae agreed to $100,000 to settle allegations that he misled investors about the mortgage backer's exposure to subprime loans during the run-up to the financial crisis. I believe Mudd came in, folks, after, like, most of the destruction was already on the way. But to check this out, this is pretty wild. The settlement ends one of the last efforts by regulators to hold individuals accountable for shocks to the financial system after banks, rating companies, and others underplayed the risk of subprime mortgages. 3 former Freddie Mac executives settled a similar Security Exchange Commission lawsuit against them April 2015. The order, which was dated August 11th and signed by U.S. District Judge Paul Crody, said it is not in the interest of justice to continue to litigate against the former chief executive. The SEC had sought to ban Mudd from serving as an officer of a public company. That's pretty amazing, man. So the SEC brought the case against Mudd and 2 other Fannie executives in 2011. The bottom line is that, yeah, the $100,000, and yeah, he's going to be in the business. And my point there is that these bureaucracies, like, oh, really? The SEC thought they had a case and they got $100,000, and, you know, no one did anything wrong. I think that was probably the wrong guy to go after. There's a couple guys that were before that fact that there's no, well, okay, I was going to say they knew exactly what was going on. I think everyone knew what was going on, folks. That's a real bottom line. You certainly, if you had a Bloomberg, you knew what was going on. You could follow the bonds every single day. You could follow the amount of subprime that was going south every single day. And they actually, the way the Bloombergs work, just so you know, even right now, bonds, when people are late, whether it's 10 days, 20 days, 30 days, 40 days, all those structures are down there, and it shows exactly how late all those bond payments are. And in the case of the subprime, they just kept piling up and piling up and piling up. I mean, in an incredible way. So anyway, you can see that the bureaucracies, you get caught in a bureaucracy, It took them 5 years to get out of it, but guess what? $100,000. Well, who knows what the lawyers cost? But I suspect Freddie Mac or Fannie Mae had to pay for those lawyers. So what are we looking at tonight in Asia? I suspect what you're going to do is you're going to get slightly lower prices. What we will have Tuesday, Wednesday, and Thursday of this week, we'll have a shot to get to lower prices or higher prices. And my point is with volume in it. I don't expect we're going to have volume next week. Why? Because you have the 31st happening on a Wednesday. We got Labor Day happening. If folks in the Northeast haven't taken a vacation yet, guess what? They're going to take a vacation. What is lined up already, and this is where this is going to get really wild, watching how we come into September. There are, I believe the number is over 50 IPOs that they're going to try to push out. Now, when banks are trying to push out IPOs, they will do anything and everything to keep markets at highs. So guess what? We might be sitting on our hands for a little longer than we think right now. The S&Ps themselves, bottom line, are up here, have been up here for, since the 14th of July. To go back to the Janet Yellen, meaning talking on Friday, one of the targets saying hawkish, dovish, what will she be? What I expect you're going to hear is that, you're going to hear a little more, in her case, it wouldn't be a hawkish tone. What it would be about, it would be about the facts that they are getting close to where they want to be, excluding the inflation deal. And we'll see how the market ends up taking it. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking at 8 o'clock tomorrow morning. Go get them, folks.